Welcome to The Explainer. Today, we are going to challenge pretty much everything you've been told about investing. What if the so-called safe path is actually the riskiest one you can take? And what if the real key to protecting your wealth lies in an ancient asset that might just be poised for an absolutely explosive future? Let's dive right in.
So let's start with a problem that every single one of us has to deal with. This question right here, it really sets the stage for everything we're about to talk about. How do you actually protect the value of the money you've worked so hard for? And this slide, it just captures the paradox perfectly, doesn't it? On one hand, you've got your safe assets, where inflation is quietly, silently eating away at your money. And on the other hand, you've got growth assets like the stock market, where the volatility can feel like a roller coaster you definitely did not sign up for. And here's the kicker. Those official inflation numbers, they don't even tell the whole story. The whole argument here is that your real cost of living, your groceries, your gas, your rent, is going up way, way faster. So even if your safe investment is getting you 5%, but your actual costs are jumping by 10%, well, you're still getting poorer every single year. Okay, so we get the problem, right? Now let's start poking holes in some of the most common solutions people run to, because as we're about to see, the conventional wisdom might not be so wise after all. Wow. Okay, now that is a bold claim. I mean, it's almost unbelievable. The entire financial industry is built on this idea that stocks are the #1 way to build wealth. So let's not just take this quote at face value. Let's look at the actual numbers. Okay, just look at this chart for a second. Since the year 2000, India's Sensex stock index grew about 17 times over. Now that sounds pretty impressive, right? But hold on. Over that exact same time frame, both gold and silver grew by 40 times. They didn't just beat the market, they absolutely left it in the dust. All right, so maybe stocks aren't the answer. What about the other classic investment, real estate? Well, according to this argument, that's not any safer. The idea is that real estate has become this massive, overinflated bubble with prices so high that it's just a huge risk for anyone trying to get in now. So if the old rules for stocks and real estate are on shaky ground, we need to zoom out, way out. We need to understand the massive global shifts that are happening right now, which, it's argued, are all part of these predictable long-term cycles. And that brings us to this really fascinating theory called the fourth turning. The idea is that history isn't just random events. It moves in these predictable 80 to 100-year cycles. And each cycle ends in what's called a fourth turning, a period of huge crisis and chaos, where the old system falls apart to make way for a new one. And guess what? The theory says that's exactly where we are right now. And this isn't just some abstract theory. You can see the signs everywhere. Central banks all over the world are getting ready for a future that doesn't revolve around the US dollar. And how are they doing it? By dumping US debt and buying physical gold. And this right here, this gets to the absolute core of the argument. The source claims that our whole system of paper money, what they call fiat currency, it's like a giant Ponzi scheme. It isn't backed by anything real, just our trust in governments. It's a system literally designed to lose its value over time. Okay, so if traditional assets are looking questionable and the whole global financial system is in this state of flux, where does the money go? In a real crisis, what's the ultimate safe place to be? Well, history actually shows a pretty clear pattern. When all the modern financial things start to fail, stocks, bonds, even the currencies themselves, all that capital runs for safety. And it runs to one place, gold. It's not really a prediction. It's what has happened time and time again. And this is the huge mindset shift we need to make. We've got to stop thinking about gold's daily price. The idea here is to see it as financial insurance. Like the slide says, when the ship is sinking, you don't argue about the price of a life jacket, you just grab one. But what if I told you there's an even more compelling, maybe even a more explosive story playing out right now? Let's talk about silver, because this is where things get really, really interesting. Now, at first glance, you'd think silver is way more common than gold, right? Over all of history, we've pulled about 8 times more silver out of the ground. But this is where the story takes a wild turn. So here's the twist. Unlike gold, which we just hoard and store in vaults, silver gets used. It gets consumed by industry, it's in your phone, it's in solar panels, it's in EVs, and most of that silver is never recovered. It's just gone. So while almost all the gold ever mined is still here, most of the silver isn't.
And the result is astonishing. There is now 3 times more investable gold available than there is silver. And get this, the entire world supply of investable silver is worth just $80 billion. That's it, for the whole planet. Just gonna let that number sink in for a second. Because, for comparison, the investable gold market is a staggering $17.5 trillion. Silver's market isn't just smaller, it's a tiny fraction. It's like a puddle next to an ocean. And this tiny, tiny market is facing a perfect storm of demand. You've got industry that absolutely has to have it to function. You've got governments that need it for national security and energy. And on top of that, you've got investors who need it for financial safety. All 3 are coming for it. This question really sums it all up. What do you think happens when this immense wave of money and necessity all tries to cram into a market that's only $80 billion big? There's just not enough to go around. So after all this data, all these historical cycles, what's the big takeaway? Well, it all boils down to a fundamental shift in how you think about the very nature of money itself. It's really about flipping the script in your head. We're all trained to ask, how many dollars does an ounce of gold cost? But the real question, the one we should be asking is, how much gold does a dollar buy? You see, the point isn't that precious metals are getting more expensive. The point is that the paper money in our wallets is steadily and deliberately becoming worthless. And that brings us to the final and most critical thought. The value of paper money isn't falling by accident, it's designed to fall. The system is working exactly as it's intended to. So the only real question left is, are you prepared for what comes next?